All right. It is Reality Bites Tuesday live at 5. If you are looking for a multi-generational home and you are trying to figure out the finances, like you're moving in the parents, the moving in the adult kids, you're moving in, everybody's coming into one house. Picking the house is probably the easy part, right?
Mm-hmm.
Then we have the conversation about financing. So we want to kind of walk through that tonight. We've got a local preferred lender that we use here. His name is Todd Triolo, and you guys are going to love him.
Yeah.
And
just to give you some frame of reference, in 2024,
yes,
there were about 4 million houses sold, and of those, about 1 in 5, so that's 800,000, were multi-gen. And guess who made up the majority of those folks?
GenX, baby.
GenX.
So, of course, we're going to introduce you to Todd Triolo because guess what? He's a Gen Xer too.
Oh, yeah.
Oh, yeah. So, and by the way, if you are watching this live or on replay, let us know where you're watching it from. We want to hear from you. And if you are watching this from New York, you're going to like, here, bring Todd in. You're going to like Todd's accent because it's going to sound very familiar. But if you're not from New York, just listen closely. Welcome in, Todd.
Well, thank you so much, Dan, Angel. I appreciate it.
Yeah.
And yes, I am from New York, one of the tens of thousands that have come down to your lovely South Carolina.
Right?
Oh, yeah.
For real.
Yeah.
And you've been working on a bunch of these multi-generational purchases recently. Am I right?
Oh, absolutely. You know what? Look, it is. It's the Gen Xers. They're looking to get out, of the Northeast, coming down here, and also, moving in with children or bringing their children with them. We all want our kids close, right?
Yeah.
And it's so important. So I've been running into that quite a bit lately, and it's been great.
Has it? Okay, good to know. So this is where I think a lot of people get confused is like, okay, I want to make sure that I'm doing this correctly, and I want to make sure I have the right expert with me. So obviously we're the experts in funding the home, but like what kind of, and we don't want to make mistakes in getting them the home that doesn't make sense, but like what kind of mistakes would you on the front end be helping them prevent in this purchase?
So, and that's important. One of the things that I've found, and it's helped me. I have 25 years of mortgage lending backing me. So, it's thousands and thousands of loans, and sometimes we learn through attrition, sometimes we learn on paper, but most importantly, I've learned to identify the errors and mistakes that people are making up front. And down south, one of the things that I've learned down here, and I absolutely love it, we close houses quickly. In New York, they are 90-day time periods. Down here, we are closing 30 days or less. And I've had deals I've had to close in 12 days just to make things happen efficiently and into the schedule of the sellers and the buyers, right? So one of the things that I've found to avoid some of those, those costly, timely errors, is one, how are our parents helping the children in some sort of way? Are they going to be living with them? It's really spending the majority of time up front on our applications. I talk about we're in a people business. I might sell finance and you might sell real estate, but at the end of the day, we're in the people business. We want to learn their stories.
Yeah.
And if we don't ask a lot of questions, we learn the stories, we don't really know how to truly address them and how to help them the best we can. So I've found, really spending the majority of the time up front, trying to make sure we understand their goals are, as well as, the parent that might be helping them in one way or another.
Yeah.
Mm-hmm. Well, and, a lot of multi-gen buyers, they say that like shared expenses are the main reason that they want to go multi-generational, because it's like you could have 4 kids and the parents, you could be paying 5 mortgages or you could just be paying 1.
Right.
Right. Oh, absolutely.
So I'm sure that's a big reason why a lot of folks are going down this road,
Well, and then go ahead. Yeah, I'm sorry.
I was going to say it really is. I mean, it's one to obviously help with the monthly expenditures, right? And maybe the parent wants to live part-time and have a summer vacation home here or be closer to kids all the time. There's so many different reasons, right? But I really believe a lot of it has to do with the cash. Borrowers, young borrowers today don't particularly have the savings. Lots of times, look, student loans, very expensive. We all know, and the cost of living had been high. So lots of times, many young families just didn't have the cash available to them. Mm-hmm. So, we look at, when I look at underwriting, I always say there's 4 C's, right, in mortgage underwriting, and cash happens to be one of those 4 C's, right? So it's either cash, collateral, which is the property, right? You have the capacity, which is the income. Sometimes it's the income. That capacity to carry might be something that, the multi-generation, working together to purchase can help with.
This actually leads to my next question is, so when we do get to the point, we've brought you our client and we say, okay, they're going to look for something, Nana and Papa are moving in. And now we're at the point of, okay, who goes on the loan? Is how can we, and I know, you're the lender, we're the realtor, title is, but like, how does the loan work best for everybody involved? Because obviously we're at different seasons of life, right? Nana and Papa are in chapter 3 and the rest of us are chapter 1 or chapter 2. So how does that kind of play out?
First and foremost, when you're looking at who has to be on the loan, who wants to be on the loan, there's a little bit of a difference, right? I find too that, I don't love a lot of co-borrowers. People don't understand what co-borrowers always are and the responsibilities that carries.
Co-borrowers? Is that what you said?
Or co-signers, right?
Okay,
we have co-borrowers and co-signers, or multiple people going on, on that particular loan.
Yeah.
I only would go down a route like that if it was most importantly needed for the income section of that. Right. Okay. Because everything else we can get around, credit can be, worked around, the collateral is obviously the property. We won't worry about that. The cash is important. And the capacity of the income is very, very important. But if they don't need the income section, I leave the parents off. I really do.
The chapter 3 generation.
Yes,
is what you're saying. Okay.
Yeah.
So the chapter 2 would be on there. Okay.
Yeah. And there's many, many reasons for it because, even true with the deed itself, right? So we call it the note. The note is actually the promise to pay, but the deed is the mortgage. And that mortgage, there's a difference. The mortgage is the recording instrument. And lots of times the parents don't even want to go on that. And the reason for it is now that's going to be wrapped up into their estate, right? So, it's so important for them to iron out some of those details in the beginning and find out what the objections are. We find out, I let them know what they need to do. Okay. And I said, look, this is what you need to do. You might need to help the children with income. All right. That Gen 1, you might need to help them with just cash, but one of the things that I think you have to almost tie in is an estate attorney, right? So, and find out to see, how that's going to affect them, down the road.
Yeah.
And a lot of times they're not even thinking about that,
and that's a good preemptive thing to kind of get ironed out before you even start your search, right? Because you're not a lawyer, we're not lawyers. So to get an attorney involved before you've even met with, if you meet with me and Angel, then we're going to get them hooked up with an attorney. But then we've ironed that out. So when we hand them over to you, that's already been discussed and worked out. And
it really doesn't have to be complicated. It doesn't have to be like we're having a family meeting. It's just like, it just makes sense. Like we're trying to keep this as simple as we can, right? Like not as
you have to keep it simple. Yeah, you really do. You have to keep it simple. And we can tend to overcomplicate things, just by throwing things out there. That's why I try and I always said, keep it simple, stupid, right? We don't have to overcomplicate.
Keep it simple, sexy. We don't want to.
I like that one better. I do like that one better. You really do though. You have to. If you don't have to bring them in that capacity, right? Where now they're signing not just, they're not just giving the money or helping out with the money end of it for the down payment, but now, if they can avoid the income section of it, it's only when they cannot, then we don't. And, and there's reasons for that as well.
You had your other question.
Yeah. And then as far as affordability, right? You've done a lot of deals with gift money lately, and what trips people up and what light can you shine on that?
Gift money gets people thinking they've got to have a last name of a certain stature before they can have gift money. But really, it's not that complicated, right?
It's so simple, and that's the, and you know what? And there's a misnomer that, you can only give so much. I've heard time and time again, well, I can only give my child 19,000 in 2025. That's all I can give, and they're married, so we can give 38,000. That's all the IRS allows for.
Right.
Yeah, and the child might need 20%. And look, in our area, these homes are going for what, 400, 500, 600 on a lot of cases. Not all, but a lot. And a sizable down payment might be, preferred, and yet it is going to exceed that $19,000 or $38,000. So
the 38 or the 19, that was per person, per child.
For a single, child, or single person, and then also married. Right? So it would be for a married couple.
Okay.
You could do the double, the 38,000.
But that's not the limit anymore, right? That's not the
No, I mean, so that is the annual limit, and that's and that's the interesting part of this whole thing. And we all thought. I mean, I've even personally thought that initially way back. That's the annual limit, but we don't look at it, and there's a lifetime limit. And that lifetime limit last year we said was $13.99 million. And this year they've now, based on the big beautiful bill, have increased it to $15 million. And you can find this, by the way, in the IRS.gov website.
I have a question.
Yes, please.
When you're saying 15.9, so that is
15 even.
15 even, yes.
15. So 15 million.
Right.
To clarify, is the max amount in one gift.
In one lifetime.
One lifetime.
It's in the donor's lifetime.
Oh, for crying out loud.
Yeah.
Okay.
It's in donor's lifetime.
Yeah. Okay.
So if my parents had $15 million sitting in the bank, and they've got 4 kids, they could gift each kid or one kid, whoever they like better or whatever. They could do a cumulative total of 15 million over their lifetime. That
is correct? Absolutely. And not pay income tax on that, or tax on that, gift tax on that. Yes.
I'm sorry. Say that part again.
Yeah.
Nobody pays.
Now have to pay. There's a 40% tax on anything above 15 million right now. So you would not have to pay tax on that gift.
How do you make sure that happens?
How do we make sure that happens?
Here's the interesting thing. Anytime you give a gift over 19,000 per child, all right, or 38,000 per husband and wife of children, the children's husband, you would have to then file an IRS form. All right, it's a very simple form, or you'd have your CPA file that form for you, and the IRS is just taking accountability against that 15 million. So if you're going to give your children $100,000 to help them with a nice, beautiful 20% down payment on their property, all they would do is file that form, no taxes due. And it's just so the IRS can keep an accountability of where your status is against that $15 million.
So to Dan's question, we could be moving in with Nana. There's one $100,000 gift, and then you could still help another kid with another $100,000 gift. They're not moving in with us.
No,
the whole collective here, and you're still good.
You're still fine.
Oh,
you're absolutely still fine. You have no limit on that.
I think
no limit up to 15 million. So,
as long as we're under the 15 million.
But, I wasn't.
I think that right there. I mean, not that I want to end the video, but that's gold right there. But by the way, before I forget, if you are new here, this is Dan. I am Angel. We are the GenX team at EXP. Todd Triolo is one of our preferred local lenders. We are able to help you if you're looking to relocate here to the Charleston area. If you want to buy an upgraded property to get everybody under one roof, all 3 of us can help you do that. So don't forget to like and subscribe if this is something that you want to continue to learn about. We're going to keep talking about this, and we will get back to our questions here. But that was gold. That tax.
We'll watch if that's the most highly watched section of this video.
Well, I think a lot of people think if they're going to give money, they're going to get a target on their back.
That's right.
Crap. And now they're coming after me because they think I've got enough. They think I'm one of the 1%ers or some such.
It's just this misnomer that's out there right now. And we ask, anytime there's a gift, any lender that you're going to is going to ask for that donor and the donee, and so the giver and the receiver, to sign a form. It's called a gift affidavit, or gift letter in short. That gift affidavit is going to have to be signed. And we always ask, well, what are you doing with this gift affidavit as a lender? They're concerned, right? That's a concern. Are you sending it to the IRS? You know,
Right.
and it's just something that, for whatever reason, they're always concerned about. There is nothing that we do with this letter other than provide it to underwriting to make sure that that gift, quite honestly, is not a loan. So
Right.
that's the difference, right? That's why lenders ask for that. We want to make sure it's not an undisclosed loan that you're giving your children, you know, because
Right.
then there'd be a repayment and it can affect your debt to income.
It affects
So-
what they can purchase. And yeah, so if they were carrying 2 loans, they
Mhm.
might not be able to afford the house.
Absolutely. So
And
that's
then-
why we ask for.
Does this affect anybody's credit when it comes to gifting or receiving? Does that do anything? Like, say one of the kids has got some really chunky or bad credit and they receive, you know, the gift from whomever. Does that affect anything? Like, are we still running credit and, oh, they're down at a low number and then the gift money helps? Walk us through that for a second.
That's actually a phenomenal question. I appreciate that. And I'll tell you what happens. You know, a lot of people don't think about this because the gift doesn't always have to be earmarked for the home that you're buying. Okay. Sometimes the credit is not so great because they may have too much usage on their credit cards, or, you know, hopefully they don't have a brand new car loan out there and they're buying a house at the same time per se. But you know, but typically what I find is it's credit cards, right? You know, and we are in pretty high national average right now. So lots of times that gift, it might actually help them if they get it slightly early, they pay off that debt or pay it down. Don't close anything out, right? Just pay it down, and you might find your credit score jumping from, you know, a not such great number to a great number relatively quickly. I mean, this happens within 30, 45 days. So
Were you saying just now that they want to do it a month to a month and a half prior to coming to you, or what's the best time frame if I'm going to get this gift to pay off debt versus having my score checked? Does that make sense?
You know, it does. And, you know, that's why it's so important to start this process early. You know, it's one of my pet peeves in my entire career. I said, I wish they would have came to me early. And, you know, and lots of times people are concerned, well, I don't want you running credit, and we have to run it again because credit's only good for, you know, 120 days and it might take me longer to find a home.
Right.
But that being said, we could do soft credit pulls. It doesn't affect your credit. But now I can find your usage. All right. I can find out how much you're using your credit. I can find out what your credit score is and see where we're at. You know, and I can give you suggestions. And again, I don't do credit repair, but it's very simple to go on to like myfico.com or one of these and easily just know if you could pay it down to, let's say, you know, 9 or 11% of the usage of that balance, or that, you know, of that credit card, or the, you know, it's going to improve your score. It's going to improve your score. So that might very well also help them in getting a lower interest rate by just doing it 30 or 45 days earlier.
That's brilliant.
Yeah,
That's
great.
brilliant. Yes.
Yeah.
Okay, Todd, we're going to take a break from all of the numbers and we're going to play a little game. So every video, if you've watched any of our videos, we do a Gen X fun fact. So Dan tries to stump me and I have to guess whomever is watching. I don't even know if they get it beforehand, but now you and I are going to go against head to head. And we're all Gen Xers. We all remember movies and movie quotes and music from 1975 to 1995.
Yeah.
Very well.
Sure.
We don't know what we did last week, but we sure as heck know that.
Great.
And I have no idea what it is every time he stumps me. We'll get back to the questions.
Let's see if he can stump us.
Yes, exactly.
Okay.
All right.
So 1981 was a pivotal year in the Gen X history.
Okay, 81.
1981 is when probably the 5 most significant arcade games were introduced to our lives.
Okay, am I naming them?
So
Are we naming them?
Yeah, we want to know the top 5. These all came out in 1981, all of them.
I was 11 in 81. How old were you?
In 81, oh my gosh. I think I was, I was actually God. I was punching, I didn't know. I was 81. I was 13 years old. Yeah.
Wow.
Okay.
This is great.
All right.
Yeah. So, but I think I know 2 of them. I know that.
All right, let her rip.
All right. I would say Pac-Man.
No.
Pac-Man on there?
Pac-Man 1980.
Oh.
All right. But we were
All right.
playing it. 81.
That was good.
All right.
That was a good guess.
All right.
Galaga.
Ooh.
Yes.
That's a good one.
Galaga. Now, here's like September 1981
Okay.
is when Galaga came out.
Okay.
It was the sequel to the 1979 Galaxian.
I never played that.
Ooh.
I had no idea.
Galaxian.
And that was Namco was the
Okay, so
company.
we only have one of the 5.
Yeah.
Ooh, this is
Todd.
gonna be rough. Asteroids?
Oh yeah.
No, Asteroids was that was one of the first arcade games.
It's not going to be Pong because Pong was before
I
that.
think Asteroids was 78, 79.
Wait,
Ooh.
Ms. Pac-Man.
Oh.
Yes, but I didn't include it in the top 5.
Oh.
Okay, so all we have is one of 4, Todd. We
Oh
suck.
my gosh. Yeah. And I hate to say, I can't tell you how many quarters I've wasted in.
Should I give you one?
Yes, give me one.
Donkey Kong,
Oh, there you go. All right.
July 9th, 1981. Nintendo is the.
Okay, so we've got Galaga and Donkey Kong.
And
I
here's
have
an interesting side note on Donkey Kong, really quick. Originally, they were trying to make it Popeye was supposed to be the character, and then Bluto or Brutus or whatever his name was, he was the monkey, but they couldn't get the rights to it. So we wouldn't have had Mario if they had said yes.
Is Mario one of them?
I was gonna. That was my next
Well,
guess.
Mario is Donkey Kong, so that's when he first appeared.
Okay.
Okay, the 3 more. Should I give you another one?
Yes.
Yeah, I think you're gonna have to. That might be.
Frogger.
Oh God.
Oh gosh. I love that one.
August 1981.
Okay, so Frogger, Galaga,
Donkey Kong.
Okay.
What else did I play? What else did we play? And you said no Asteroids.
Nope.
No Ms.
The
Pac-Man.
2 that you're missing were Atari, was the company that came out with these games.
What did we play, Todd?
I know.
Pitfall?
Worry.
Oh.
No.
The ironic thing is, I can remember where I played from.
Yeah.
And how many quarters, like you said.
And how many quarters? Yeah. Yeah.
Let me give you the next one. August 1981. This was one of the first games that had a female programmer, and then the game actually appealed to young ladies. So they were trying to get the ladies into the arcades because the guys were like, "Yeah, this is fun and all, but where are the chicks?" Centipede.
Oh, and the little roller ball.
Yeah.
Yeah.
The roller ball.
Oh, yeah.
Okay, so Galaga, Donkey Kong, Frogger, Centipede.
The last game, it wasn't a roller ball, but it was a dial of sorts, if that helps you at all.
Ooh.
Like it would.
I don't know. Yeah, I remember. I played Galaga all day.
Okay, last one.
What
We
do you-
both lost.
We did. We
So
saw.
I'm hard. And
Last
yeah.
one, Tempest.
Oh my gosh. Tempest. Yeah.
Tempest, you had like this dial and there's little segments all the way around.
No.
And no.
I do
Galaga
remember
all day and all night. Galaga.
Yeah.
That was the end of the whatever. I'm gonna go eat and come back and play Galaga and get my high score.
So isn't it crazy that like all the stuff that defined us as children was all happening in the same? So 1981, huge year for arcade games.
We were the first gamers.
We
Yeah.
really
Our
were.
generation.
Yeah.
Oh yeah. Yeah. I mean, it was. I mowed lawns to pay for quarters to go into the machines.
And it was only 25 cents. Like now you want to play an arcade game, it's like $1 or $2.
Yeah,
Oh,
I'm like,
yeah.
it's not double player. We're not 2
No.
players. We're
Yeah.
just 1 player.
Yeah, not fun. It's not fun anymore.
The question is do you still play games?
No,
No,
only
neither do I.
video games. I cannot own. You know how people bring in the video games into their house? I cannot have that. I will not get anything done. Sorry, we're not looking at houses. We're not doing nothing. I'm playing Galaga all day. I'm 11 again. No, I can't have one of those in my house.
I don't play on my phone. I don't play at home. I think I just burnt out as a kid.
You got it out of your system. You got it out of your system.
Okay, let's get back to our multi-generational thing.
Yes.
Okay.
Mhm.
You mentioned it earlier. They need to come to you earlier because they need to like talk it through and have a plan.
Yes.
What do you wish people would have planned for sooner by the time they get to your chair in front of your desk?
There's one thing that we chase paperwork lots of times, and the reason why I say sooner is sometimes it's very hard to chase a paper trail. And when you're gifting monies, okay, we have to, while the amount doesn't necessarily matter as much, we have to, know where it came from. And, lots of times I've seen mistakes made where they'll, let's say, get a bank check or a money order or something like that. They're not traceable. All right. So you can't do that. So, and they didn't need to do that. It's just depend upon, right, how they're brought up and what their lifestyles are.
Right.
It's very, very difficult for us. So we have to be able to trace the money. So lots of times we don't need to dig into the gift givers. In this particular case, we don't need to dig into their life story. But I say you can give the gift with a personal check. And then all I do is got to ask, let me get a copy of that personal check. You can go on your bank account statement and you can click on the check number, and it usually will show when it's been cashed, and just give me that. I don't need to see your whole life story.
How about if the parents and the child bank at the same institution? Can you just do like a direct transfer, or is the check the best way to do it?
In that case, a transfer would be fine. The question becomes, depending upon the parent and what their assets are, or how private they are, they may not want to tell their whole story to myself or even the child, possibly. You just don't know, right? So,
we're a little suspicious. We're like, scan a QR code? No,
we're not doing it. What do you want with this information?
What are you going to do with it?
No, I mean, and I get the privacy. Sometimes they just don't want their children knowing what they have, initially, as generous as they are. And that's just human nature. That's fair. So we try and keep it very private and personal to them, right? And I don't disclose anything. Obviously, I have a fiduciary responsibility, not to tell what party doesn't want to know, and keep that private. But that being said, that's one of the biggest, pitfalls I find is the money trail, and being able to make sure that they're comfortable with how we do it, and do it as quickly and as efficiently as possible, without asking for a whole, bunch of their life story. Trying to think if there's anything else. I mean, there are some other things, but it has more to do also with, the income section, and that's if the parent's going to co-sign or be on the loan, that we have to look at.
Right.
So
that makes sense.
Yeah, I mean, that's, lots of times the parents, I run into this quite a bit. It's a little hack that people who have been in the industry for a little while know, or should know. I should put it that way, should know. Lots of times when you have a parent that's retiring, lots of times their income is diminishing. They may not have a lot of debts. They're, because now they're living off of retirement income. They may have significant assets saved in a 401 or an IRA, but they don't really need it right now, right? They're living just fine on what they have, whether it's Social Security or whether it's, a retirement account that they work so hard for. But that being said, sometimes we need to create income for them if they're going to go on the loan. So I like them to understand what that might look like, right? So if you're 59 and a half, you can take automatic withdrawals out of your 401 or your IRA. You're likely going to be taxed on a piece of that, so you have to be prepared for that. Okay. If it was put in tax deferred, you're now going to get taxed on it coming out.
Right.
But the beauty of it is too, you could start that pretty quickly. That's not something that you have to have going on for a year with us at any event. We don't need to see a history of that. Just off to see that we have a 3-year continuance on what's in that account. So if you're going to draw $1,000 a month to help afford the child's property or the other, whoever you're helping out, then we'd want to see that you can cover that for 3 years and what's within that account. So.
Okay, good to know.
Yeah, that's good.
So let's look early on make sure that whether they have to help in the income capacity or the capacity to carry that loan.
That would probably, I would think, go toward the price point of the home that they're buying.
Yes,
Yeah.
absolutely.
Yeah.
Absolutely. Yeah.
So let's kind of wrap this up a little bit. We do a great job of working with our clients to find the perfect home that meets all their needs for their older kids or their grandparents, and they're feeling good about that. And when we hand them over to you, what do you do to kind of calm their nerves or simplify the process for the financial aspect of it? Like, what do you bring to the table that makes them go, man, I thought this was going to be scary,
because we call you our expert, right? And we want to make sure that they understand, like, no, this guy knows his, what.
Right. Yeah.
And I think that's, I do believe that's important, and one, I think the fact that I've been doing this as long as I have, right, and that's not an answer, but it's just one of the things that I've learned is, you've got to care more about them. You've got to want it more. Yeah, they've got to want it more, and you've got to care more about them necessarily than about a loan, right? It's not the loan. I never look at it as that. I really care more about the customer and trying to meet their needs. It has a lot to do with just listening, So if you listen to what they need, what they want, what their concerns are, what their timelines are, whatever it might be, and then you address that up front, and you also have to be, you have to really know the person, right? Some people are A personalities and they want to know every single little thing up front. Some people just tell me, Todd, we don't care. Just get the loan done for us. We don't need to hear every update and every little thing. You have to know your customer, right? So I said, knowing your customer from a banking perspective, I think is the most important thing, because I don't look at it as a single transaction. This is just one of many. We live off of referrals, right? And that's I want it to go as smoothly, and I want those 5-star reviews. So that's really what's important to me.
Speak nicely about us on the internet after we're done. That's what we like to say. Is that's the goal. We want to make sure. Now, listen, we know that this has been a lot of information. We have Todd's information that we're going to put up on the screen here. If you have any questions specifically, like he said, to get started early, like maybe, this is the first of the year. Maybe you've gone and you spent time with your parents and you're like, we might need to be making this move a little sooner than we thought. Maybe you realize some things are moving in your parents' lifestyle that is showing you that you need to all be under one roof. And you want to move to the Charleston area, we have got you. And then, I think we're going to, first thing is after you call us, we're going to have you call Todd, or call Todd and then he's going to call us. Either way, you can find us here on YouTube every week. Every Tuesday is our Reality Bites, our live at 5 that we do. We bring on experts like Todd, but if you want to call Todd directly, there is his contact information. And we would love it if you would like and subscribe and be here week after week with us. If you want to reach out to us, a call, a text, an email, all of our information is in the description below. And we would love to help you with this process, because clearly it's not, as Todd said, it's not a 90-day process like in New York. The hardest part's going to be finding the house, because Todd's got it all wrapped up with a pretty little bow.
Oh, and I appreciate it, guys. Thank you so much for inviting me on the channel again. I'm Todd from Embrace Home Loans, and I would more than happy to be glad to help any of your people. So please reach out, text again, same thing, text, phone call. I always pick up my phone. That's something you learn. That's a New York thing. We don't sleep. They all said to me, "You're going to relax when you go down to South Carolina." I'm like, I haven't seen it yet, but that's in my blood.
That doesn't mean call Todd at 3 a.m. Know your time zones. Plan accordingly.
Same time zone as New York and
that's true. We are. We're kind of okay with that. It's
right. Thank you so much, Todd. We'll see you around town.
Thank you so much, guys. Take care.
You bet. Bye-bye.